It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, May the 19th, 2016. Last newsletter of this third week of the month of May. We have another exciting newsletter for you tonight. We got crude, S&P, gold, and of course the euro. Crude, S&P, and gold are all quite bullish this evening, and the euro trading looking a little bit confused inside of a trading range after what was an extremely volatile session that saw a complete trend reversal in 3 out of 4 markets today. And it looks like that euro might have finally found a bottom after a multi-day bear trend. Got a great newsletter for you guys tonight. We'll check the schedule for tomorrow. We'll give you some plans for a Friday session in our trade room, which opens up at 8 o'clock Eastern time. But I do want to remind you, though, the only place to watch the full-length version of this video is going to be on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, don't forget, you can find the link in the description of the YouTube video, and that'll take you over here to our trading blog at Sideways Markets. While you're here watching the full-length version of our newsletter, don't forget, if you're not an advanced member here at School of Trade and you'd like to grab a free pass, come out and attend our trade room as a guest for a few days. If you're not a member, this is your chance. Grab your free pass in the upper left-hand corner. In the lower left-hand corner, don't forget to register as a member of our mailing list. I'll send you an email every evening. Promise no spam, just the good stuff from the nightly newsletter every evening before 8 p.m. Eastern time when the nightly newsletter goes live. It usually goes out about 7:15 to 7:30 p.m. Eastern time, Monday through Thursday. Also, hold on, right below the video, you can find a link there below the video to download all the charts that you see me using in tonight's video. You can download all these charts and have them ready for tomorrow's session. Follow that link right below the video. And then don't forget, over on the right-hand side, I get this question all the time. What does it feel like? What do we cover? What am I going to learn as a member here at School of Trade? You can learn all about our 3 levels of membership and everything that means to be a student here at School of Trade by joining the trial membership on the right-hand side of our trading blog. Hope you guys had a great Thursday session. Boy, we had another wild one here. Before we jump into tomorrow's Friday session or Friday plan for tomorrow, let's check the schedule for tomorrow. Tomorrow's Friday, May the 20th. Looking at, did we get any news here tonight? No major news on the schedule for this evening. It looks like tomorrow all eyes are going to be on the London session. We've got some minor news out of Germany and Great Britain, and then we're going right into the CPI and retail sales out of Canada. You know, oftentimes Canadian news will have an impact on crude oil. It's not expected to be too much. It looks like the most important news tomorrow morning is going to be the existing home sales at 10 a.m. So, of course, we expect all eyes to be on existing home sales tomorrow morning at 10 a.m. Eastern time. Nothing really else that we're expecting to be market movers. Unfortunately, we may continue to see some reaction to the extremely unfortunate events, which they're now, I guess, now calling an act of terrorism. My heart goes out to anyone out there who was affected by this. And you know, boy, oh boy, I hope we see change that we need here and stop all this unnecessary violence. I'll tell you, my heart breaks every time I see this violence erupt around the world. I won't go too much into detail on it, but I definitely will tell you that I have definitely a heavy heart here this evening reading these headlines right now, and I'm sure tomorrow will be another day where we see more headlines about that, and I really hope that we find out that it wasn't on purpose. I really hope that we find out that it wasn't somebody actually doing this on purpose. Although it is a bad situation overall, again, it breaks my heart to know that people are actually purposely inflicting harm out there. But anyways, you know my point of view on this. My best wishes and condolences to anybody out there who's affected by it. I'm sure that will be a definite player in tomorrow's narrative. As far as major scheduled news tomorrow, though, all we really have to worry about is the existing home sales tomorrow at 10 a.m. Eastern time. Don't forget, we'll be opening up our trade room tomorrow morning at 8 o'clock Eastern time, and we're going to make some sense out of these crazy markets. Starting out with crude, we got crude, we'll go to the S&P, gold, and we'll wrap up with the euro. Don't forget, this is the last newsletter of the week. Yeah, they let me out of my cage here at the School of Trade headquarters on Friday afternoon, so I'll be out of here Friday afternoon. Next newsletter will be on Monday evening. But first, though, let's get the plan going for tomorrow. Crude is bullish, just a little bullish, and trying to complete a second leg higher inside an aggressive bull channel, which tells us the most reliable trading opportunities will be using pullbacks and bear traps at support levels tomorrow. The bears had control until shortly after lunchtime today before the buyers ripped this thing higher, held a pullback, and now they've got control and they're hunting for a symmetrical second leg on the way back to yesterday's highs. The bull channel and spiking channel, that spiking channel is kind of questionable, but that bull channel and spiking channel both tell us to keep looking for long, right, buying pullbacks with new higher highs, and really the most reliable trades are going to be looking for traps at previous areas of support. You know, we've spent a lot of this week talking about swing buyers, swing sellers, traps. So if you missed the videos earlier this week, if you missed my nightly newsletter earlier this week, there's a button right on the blog. It says nightly newsletter. That'll give you kind of the rundown of all the prior videos. I would highly encourage it if you missed the earlier videos on the newsletter schedule for this week. So sellers, boy, I'll tell you right now, you need to be patient right now. If you're a bear, you got to wait for this market to make a new lower low and hold a retracement before they can really get anything reliable to the downside. Now, here's a very, very good example of a market that started off the day very bearish, right? It was quite bearish, and you can see a very good example here. For the market starts off, right, in a bear move lower. It was actually a bear spike in channel, bear wedge, depending on the way you defined it. We looked at this as a bear wedge this morning, and you can see just incredibly accurate how those wedges can predict where that market is going to end up. Beautiful trap high right above some of these prior swings, and those swing sellers sending it right back down to that low. We talked about that throughout the session today in the trade room, so no surprise there if you're a student of mine. What is very interesting though is to see that, right, definitely you assume there are going to be sellers above this swing, sellers above this swing, and you can see the sellers came into the market right here but didn't get very far, and as soon as we broke above that, you'll notice what happens here. The sellers gave up on it. You can definitely tell they gave up on it, and once we broke above that high, you pretty much know all the swing sellers, yeah, they made some money down here, right, trapping high and hitting back the low, but they quickly gave that profit back once they, again, undoubtedly sold just above that prior swing. Price pulls back and the buyers just bought it like candy, right? And you can see here, it completely takes out the high. Now that means those bears are out of the picture. I want to mention that kind of analysis and that psychology in the market because we're going to see on gold later on in this video how that is still in play. Gold is also bullish, and I'm going to see that in two charts from now, but I want you to see one very big factor about this, and that is right here, and that's where they broke above that prior swing. Sellers undoubtedly enter the market here, but this is where they know they're wrong and they start to exit the trade as that price goes higher because they know that's the last resort. Their catastrophic stop needs to be right above those highs. You can see what happens when catastrophic stops get triggered, right? So a lot of sellers giving that exit button here once they knew they were wrong, you know, shortly into the afternoon session here this morning. So this is a very bullish environment now. The swing sellers have left the building, and now all we're left here is that bull channel. I'm going to show you a good example of that on gold in a few moments here. So we get a bull channel. Looking at the technical clues right now. Really the most important clue right now, the bull channel is important, right, this bull channel. But if you're a client of mine, if you're a student here at School of Trade, I really hope that you're yelling at the screen right now saying, hey, that's the wrong way to draw this channel. If you're a student of mine, you should be able to see that this is the wrong way to draw this channel. Well, it's not the wrong way. You know, it's difficult to say there's a right and there's a wrong, but in my opinion, there's a more reliable way, right? You're always going to find support, active support sometimes, but when you're looking for the most reliable channels, there's a technique behind it. There is a science behind technical analysis. That science leverages the self-fulfilling prophecy, right? We want to have the most number of eyeballs seeing the same thing. This is this is the unreliable way of drawing that channel. And really, it's because it's the only thing that fits right now. So again, if you're a student of mine here at School of Trade, good for you if you're looking at this chart saying, wait a second, I'm calling shenanigans. This is not the right way to draw it, but it really is the only fit. What is really the most important thing about this channel is you'll notice that we've recently hit the low. Now, here's what I want to remember about channels is rotation from the high down to the low. We just talked about this today in the trade room about you always got to give those channels and ranges the rotation test. Now look closely here. We just moved to the high of that channel. That means it should be going where? The low next. Where does it go? It actually goes higher, but it does get to the low. This is why we know this channel is valid, although it may not be the desirable channel, it is valid. Now with that low, where should we be going next? Up to the high, right? So the high of that channel is the next short-term objective for these buyers. Okay, channel rotation. Now with that said, a bull channel always tells us what? There's going to be buyers waiting here below all prior swings, right? These are what we call those swing buyers. As this price pulls back, swing buyers are looking for traps below that low, below that low, below that low, and below the 48.06. In my opinion, the battle zone is going to be this area right here. If you're a buyer right now, it's going to be a gift to get this price to come back and give us a chance to look for failures into strength into pullbacks, and pullbacks on the way up. We may not get that gift from the crude gods here. We basically may not get it until we get that double top reversal here later on, and then that may be a little bit too late for the buy side. We'll have to wait and see how that plays out tomorrow. Most important thing right now, though, is this market, like I said before, we've got all those swing sellers. They're all beat right now. Okay, sellers cannot make money in this market anymore. That means everybody's buying. Sellers are buying and buyers are buying. What does that mean? That means we want to look for buying opportunities along with them. The buy zone down here, the battle zone I should say here, 48, 45, 48, 50, 48.06. In my opinion, everything that pulls back here will be bought up by swing buyers, and it won't be until we can get and stay below that 48.06. And if they can do that, I'll be quite surprised, right? But we'll be looking for a retest of that low. So bears, you really got to stay patient right now. If you're looking to participate, I would be very careful trying to fade this high going higher here because obviously I don't think there's any bears left in the building right now. Now, I think the most important clue we see right now is this A to B leg. One of the most important things we know about human nature and, of course, crowd psychology is that a big, strong move is usually chased, and it's usually followed up with a symmetrical move continuation. It doesn't have to be the same amount of time, but it usually will end up being the same amount of range, and that puts us up at the measured move at 49.24. Another example of how this chart is a little bit different than what the textbook says. We talk about measured moves and channels and all the technical analysis in our intermediate level classes here at School of Trade. And you probably know, again, if you're a student of mine, you're probably saying, wait a second, Joe, that is also not as reliable. But again, I'm basing this off of the spike, right? This real strong spike. It's what technical analysts would call a measuring spike, right? It's a measurable move. So a spike higher then pulls back, and we're expecting to see a symmetrical leg higher, at least to 49.24, possibly all the way back to yesterday's high at 49.56. So we talked about the bull channel. We talked about the battle zone. We talked about the measured move. Now look at this spiking channel. The spiking channel looked good until about 6 o'clock Eastern time when we saw this little gem right here poke its way higher here. Now, this may just be an overshoot and it may correct lower, but honestly, my gut tells me it may not pull all the way back here. So one way to look at this would be, where's the most reliable trade? The most reliable trade is always going to be back at support and then buying up, right? Traps and then buying up, traps and then buying up. Okay, but remember, below 48.06 now, that becomes the ability now for the bears to take control here because the swing bulls, right, those swing buyers will have been beat if it can stay below 48.06. Now, if it goes higher here, look for those aggressive buyers here to use this high as support to buy on the way up to that measured leg, right? 49.24, and then, of course, up to that 49.56 ultimate target.